Now, again, am I short Bitcoin? The answer is no. In fact, in Verified Investing Crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. Now,
Gareth Soloway is a well-known figure in the world of trading and entrepreneurship, having made a name for himself through his impressive career accomplishments. As the founder and CDO of In the Money Stocks, Soloway has developed a reputation as a highly skilled trader with a proven track record of success. There is evidence of investors pulling money out of crypto funds. Per data tracked by CoinShares, digital asset investment products saw outflows totaling $32 million last week, the largest since late December 2022. Before going further in this video, make sure to hit the subscribe button below for more recent updates. Bitcoin funds alone bled nearly $25 million, while short Bitcoin funds saw an inflow of $3.7 million. Bitcoin tends to move in sync with Wall Street's tech-heavy Nasdaq index. Recently, the 90-day correlation coefficient between the two strengthened to 0.75. Nasdaq fell by 2.4% last week, pausing a 4-week winning streak that offered positive cues to high-risk assets like Bitcoin. The market is patiently awaiting realized profits that are parked in USDT right now to pile back into Bitcoin and Ether. This is why we ran out of breath to break $25,000. According to Gareth Soloway, Bitcoin and the broader cryptocurrency market delivered a strong comeback last week, adding over $2,100 billion to investors' wealth. As of press time, Bitcoin is trading at $24,645 with a market cap of $475 billion.
Let's get right into Bitcoin, see what we got. So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs, and then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000, approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin.
Now, Bitcoin's upswing has come to a screeching halt at a price level that proved to be a tough nut to crack last year. The leading cryptocurrency by market cap picked up a strong bid at the start of the year and has gained nearly 50% since then, outperforming major traditional risk assets. However, the bullish momentum has stalled since February 16, with the cryptocurrency failing multiple times to secure a foothold above the $25,000 mark. Tech firms performed horrendously last year, and it's all down to how well they recover in the first quarter. That's why Bitcoin is not pushing further. Data from charting platform TradingView show Tether's dominance, or the stablecoin's share of the total crypto market valuation, has steadied around 6.5% since late January, a sign of traders rotating money into the stablecoin, as Kiss has said. USD's dominance fell from nearly 9% to 6.5% in January as Bitcoin rallied.
We do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process, but the bottom line is a strong economy means higher interest rates, or at least higher for longer, before the Fed is willing to cut. So that, again, is a negative. If we look at the 10-year yield, and I'll pop up my chart in just 1 second here to take a look at it. In fact, let's do it right now. Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's a trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right?
The S&P 500 was on course for a third consecutive loss. The index last week slipped 0.3%, marking a second straight weekly decline. Markets were still feeling the weight of outlooks from Fed officials last week that more interest rate hikes may be needed to further tame inflation. The bank's chief U.S. equity strategist said Sunday he sees similarities between current valuations and the death zone in Minty Everest, representing the excessive levels that stock prices have climbed to since 2023 started. The U.S. stock and bond markets were closed on Monday for President's Day. The S&P 500 nosedived 2%, falling below the key 4,000 level, while the Dow Jones Industrial Average shed nearly 700 points or 2.1%. The technology-heavy Nasdaq Composite tanked 2.5%. The consumer is still very pressured, and if you look at economic indicators, balance sheets are running thinner and savings rates are declining relative to previous periods. Rising yields as well as equity moves over 90% of S&P 500 stocks close in the red reflect the notion that the Federal Reserve may not be done lifting interest rates. More traders on Tuesday 24% predicted a 50 basis point increase at the Fed's March meeting versus 9% a week earlier, according to the CME FedWatch tool.
Now, Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right, so again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1,300 range on that chart. Gold, the gold chart here, we are seeing it trying to hold support right here. I still think there's one more move down on gold here, down to this level here around 1,800 before it becomes a full-fledged bull market. So again, we'll watch that to see, and we'll go from there. So the silver chart, guys, it did hit support. I did pick up a little SLV with my trading group at Verified Investing Alerts, which is at inthemoneystocks.com. And again, we are in the money slightly on that. I added right down in this lower range right here. And again, I will continue to add. There's a lot of support here on silver at all of these lower levels. I think the most downside you probably would get would be around $20.80, somewhere in that vicinity. But I actually do like silver now. Silver is now pulled back into a range where it actually makes more sense for me. Okay.
Although the bullish outlook for Ether price makes logical sense, investors need to be cautious as a fatal crash in Bitcoin price would undo everything for Ether. Ether has a lot going on as the network continues to evolve to support sustainable usage and yields for Ether holders. The gold market is struggling to hold its ground in neutral territory as both the U.S. service and manufacturing sectors improve more than expected, highlighting further resilience in economic activity. Gold prices dropped below $1,850 an ounce in initial reaction to positive economic data. The dollar index firmed to near its highest in 6 weeks, making gold more expensive for other currency holders. Benchmark U.S. 10-year Treasury yields were at their highest in over 3 months. High interest rates and bond yields discourage investors from placing money in non-yielding assets such as gold. What are your thoughts on Gareth Soloway's prediction about Bitcoin and other digital assets in 2023? Do you expect these assets to perform beyond investors' expectations? Let us know in the comment section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.